All right, let's dive right in. Today, we're talking about an algorithm that's basically a new pair of glasses for anyone trying to make sense of the market's chaos. It's called bulk volume classification, or BVC for short, and honestly, it's forcing a complete rethink of how we find the real signal inside all the noise of today's crazy fast financial world. And we've got to start with a pretty bold claim. The old way of reading the market, it's broken. I mean, fundamentally broken. The classic tools that people have sworn by for decades are just failing in this lightning-fast environment. So the big question is, what on earth changed to make them so obsolete? Let's get into it. So here's our roadmap. First, we'll tackle the high-speed problem that broke all the old rules. Then, we'll introduce BVC, which is all about seeing the forest, not the trees. From there, we'll uncover its huge information advantage, see how it actually works in the real world, and then wrap up by looking at the whole thing through a new, more complete trading lens. Okay, first up, trading's high-speed problem, or why the old playbook just doesn't work anymore. Just think back to the markets in the 90s for a second. Trading happened at human speed, right? On just a handful of exchanges. Old tools like the tick rule were built for that world. Their whole job was to figure out if a single trade was a buy or a sell. But now, look at today. The market is scattered across dozens of different venues, and it's completely dominated by high-frequency trading that happens in microseconds. Trying to label every single one of those trades now, that's like trying to catch individual raindrops during a hurricane. It's pointless.
So, if digging into individual trades means getting lost in the trees, how do we step back and actually see the whole forest? Well, that's exactly where bulk volume classification comes in.
VPC does something kind of radical. It takes a big step back. Instead of obsessing over every single trade, every little tick, it just groups them together into chunks, or what we call bars of volume. And then it just looks at the price change from one bar to the next. It's the difference between trying to analyze every grain of sand on a beach versus just watching which way the tide is moving. You get a much, much clearer picture of the real momentum.
And the logic behind it is just brilliantly simple. First, you bundle a bunch of trades into one bar. Then you just check if the price went up or down compared to the last bar. If the price went up, it's a pretty safe bet that buyers were in charge during that little window. If it went down, sellers were probably running the show. It's this elegant, probabilistic way of thinking that just cuts right through all the noise.
And this is the real aha moment. BVC's superpower isn't just about speed. It's about seeing something the old methods were totally blind to. It's a shift from asking who pushed the button to asking why they pushed it. So check out this shift in thinking. The old algorithms, they were obsessed with finding the aggressor in a trade, who clicked buy or sell first. But the smartest traders know how to hide what they're doing. VVC, it doesn't care about one person. It measures the net order imbalance. Think of it like the overall result of a tug of war between all the buyers and all the sellers over a period of time. This lets it sniff out the real underlying sentiment, no matter how cleverly it's disguised. And honestly, the results really do speak for themselves. When you look at modern, high-frequency markets, BVC consistently comes out on top. And here's the kicker. As the markets got faster and crazier, the accuracy of the old methods went down. BVC's accuracy, it actually got more robust. That complete reversal is everything. So that's the theory. But what does a superpower actually let you do in the real world? Let's take a look at how this all gets put into practice. First off, there's this incredible efficiency gain. Because BVC works with bars of trades instead of every single tick, it cuts down data storage needs by a mind-boggling 97.5%. Think about what that means. Analysis that might have taken days before can now be done in minutes. This is what suddenly makes real-time monitoring of market behavior possible for people who don't own a supercomputer. Okay, so the most famous application of BVC is this metric called VPIN. The easiest way to think of it is as a market toxicity gauge. It uses BVC's buy and sell estimates to figure out the probability of informed trading. That's when people are trading based on private info, the kind of stuff that can really destabilize things. VPIN has become this critical early warning system for big, volatile moves. And what exactly does this VPIN gauge predict? Well, spikes in VPIN have been shown to come right before big jumps in volatility, drops in liquidity, and even those scary flash crash events. In fact, there was a test against the Chinese market crises where the VPIN metric had a 100% accuracy rate in flagging the high volatility periods before they happened. It gives risk managers a vital heads up that trouble might be brewing.
Now, BVC is an incredibly powerful tool, for sure. But it's not a magic bullet. To really understand where it fits, we need to look at the full picture, both its strengths and its weaknesses.
So, it's really important to know that BVC's performance isn't the same everywhere. It tends to be more accurate in markets that are all in one place, like futures, than in the super fragmented US stock market. It also needs to be carefully tuned for each specific stock to really work well. And to be fair, there's still an academic debate going on, with some researchers questioning if its advantage is really as universal as its biggest fans claim. But that brings us right back to the core idea. This quote from the research absolutely nails it. VVC's real breakthrough isn't that it's just better at the old game of spotting the aggressor. Its advantage is that it's playing a totally new game, detecting the hidden information inside the entire flow of orders.
And when you lay it all out like this, the shift is just so clear. On every dimension that really matters in today's markets, data efficiency, speed, accuracy in the high-frequency world, and especially information detection, VVC is a massive leap forward. The old tools, well, they just weren't built for this reality.
So I'll leave you with this thought. If you imagine the market as this massive, chaotic conversation happening at the speed of light, the old algorithms were like trying to listen to just one person at a time. BVC is maybe the first tool that lets us step back and actually understand the whispers, the mood of the crowd, the hidden gossip that's really moving the market. And what you do with that information, well, that's the next chapter.